Hello, I'm Lawrence Chard. Welcome to our Chard's Coin and Bullion Dealer YouTube channel. Well, today, where do we start? We didn't publish a full-length video last week because we were just too busy. And a week last Friday, we became aware that silver in the commodity market had entered backwardation. I think we've got a page now explaining that, of a blog page, and we actually, I posted about it on the well-known site, the Silver Forum, and we'll put your link on there, and that was about silver backwardation, and people joined in. We did think about shooting a very quick, short video on the Friday, mentioning the backwardation, just as a news alert for our customers. Unfortunately, we just ran out of time. We thought we'd do one on Monday, which was now a week last Monday, I think. We didn't get time, and the same pattern all last week, we didn't get time. We thought, okay, Christian said, can we do one on Monday? We're now Thursday, and it's gone 4 o'clock a bit, 20 past 4 roughly. And we're just starting. There's so much, we're not going to be able to get it in. So I might gabble away and talk too quickly. It'll make a change for some people who reckon I go very slowly and it gets boring. But there you go. So it's been crazy. So let's just start with silver. Before, and in fact, on the Friday, nothing much happened, except silver did spike up over the weekend to over £40 an ounce, which is pretty high. And, you know, I'm used to looking at these graphs and charts on screen about this big, and when we get them printed out, I think, what's that on there? So, to put silver prices into some sort of perspective, earlier this year, around about March, I think we saw the bottom this year, silver price was between £22 and £23 an ounce. Just after silver hit backwardation, and it was £39 an ounce, I posted actually on Silver Forum that look at the futures prices, and they're like a couple of dollars lower. So I think that silver is likely over the next month or two to go down a few dollars or a few pounds an ounce rather than to go up. I think the next day silver had gone over £40 an ounce for a new all-time high. In fact, it hit about 6 all-time highs within a few hours. Somebody on Silver Forum said, what were you saying? But yes, if we look at the chart since then, it's actually dropped off, and quite a big drop on silver. In the last 24 hours, I think, we've seen a drop to about £35.50. So silver have actually dropped by about 10% since that all-time high, and is back down below where it was when backwardation started. I'm not going to explain backwardation today because we just haven't got time. I'm going to have to explain a bit. Basically, that really reflects the fact that immediate silver for immediate delivery is in short supply. And that means people like the Royal Mint couldn't just get its hands on tons of silver that it needed for its production very quickly. So that has meant that the Royal Mint silver production has been hit. So sticking with silver, this news about backwardation, it actually rolled out quite slowly because I mentioned it on Friday, and on Saturday nothing much happened, and then on Sunday things went a bit crazy. What happens when you get news about silver backwardation or any supply problems or restrictions in the silver market? All the silver lunatics come out. And I'm using that word advisedly there because the word lunatic comes from the Latin luna, meaning moon. And that's because that for centuries, if not millennia, people have noticed that other humans exhibit strange behaviour around about the time of the full moon. So whether it's affected by gravitational pull or moonlight or tides, because the moon affects tides, we don't know. So it's fair enough to say silver lunatics, or maybe even silver lunatics. and they go into overdrive on social media with all sorts of ridiculous headlines and clickbait stuff. And don't forget, on social media, people get advertising revenue for the number of viewers they get, because that means that YouTube and TikTok can actually monetize that and get money from advertisers to tune into all this stuff. And it also happens to be the most gullible people that often tune into that, who are more likely to believe the adverts for crazy things. And the crazier the things are that you say, the more clickbaity it is and the more viewers you're going to get. Whereas when we do videos, I tend to try and keep it fairly factual, not go wild and not be crazy. Of course, we don't get the same viewing stats, but folks that are watching me usually are the intelligent, sensible, well-educated people that appreciate facts and figures and accuracy rather than wild hypes. You might get a bit of wild hype today, but there you go. But anyway, and also we had a quick look at Google Trends, and we've got some graphs. I'm not sure I've got them all in front of me actually, but we'll show you on screen. The number of Google queries for silver price has gone up by at least a factor of 4 this year, and possibly a factor of maybe 6 or more. And most of that increase has been in the last month, just in October. So that's pretty wild. Is that enough about silver for now? We'll still talk about the supply situation. I've already mentioned that the Royal Mint have problems sourcing enough silver in enough quantity. We give the Royal Mint forecasts for how much a week or how much a month we're likely to want for different products. Silver Britannias, silver other things, for up to about 6, maybe even 12 months ahead. And we revise those quite frequently. This year, we've been revising them probably once or twice a week. But what we found is in the last month, we've only been receiving, or we're getting allocated, only about 2/3 of what we're asking for. And there was a period of 2 weeks when we got absolutely nothing whatsoever. This month, we should have got, and a few weeks ago, early in the month, we should have got a ton of 1 ounce silver Britannias, 30,000 ounces. We've been allocated 10,000, and I'm not even sure they've arrived yet. I think the other 20,000 are going to arrive maybe next week or the week after, or maybe sometime next month. We don't know. So for now, we sold out of 1 ounce silver Britannias, and there's nothing we can do. There's no alternative supplier. There's only the Royal Mint we can get them from. There's only the Royal Mint that can make them. We're in a queue like everybody else. Anyway, that's silver. Let's switch to gold, because actually gold, to my mind, is the more important market when it comes to investment and investment demand. Sure, there are more collectors for silver coins, but collectors tend to buy 1 coin or 2 coins at all. Investors will buy 100 or 1,000 or more. And even with gold coins, investors will buy in the hundreds and thousands of ounces sometimes. And of course, investment gold is exempt from VAT in the UK, whereas silver isn't. So what happened in the gold market? Let's have a look. In the last few weeks, gold has continued to hit all-time highs almost day after day, sometimes several all-time highs in a day. Let's see where the high point was on gold. Gold hit a high of £3,268 an ounce. Currently, or just before we started shooting this video, it had dropped back to £3,107 an ounce, roughly. Is that about a 6% drop from the high? I don't know. I should have calculated it instead of trying to do mental arithmetic. That's interesting that gold's dropped off. Also, we looked at Google Trends searches for that, and they show a similar pattern to silver. They're up by a factor of about 4 over the year, and most of that increase has been in the last month. So that's an amazing... I mean, I've been saying that the increase has been exponential. So what we could say is this month it doubled twice. It doubled in the first couple of weeks, and it's doubled again since. So it's now about 4 times what it was at the end of September. And even up to last month, we were actually struggling to deal with all the inquiries we were getting, mails, emails, phone calls. For that demand and the inquiry level to go up by a factor of 4 makes it almost impossible for us to respond to everybody. I will say, though, if people go online, open an account and order online from us, they will be able to buy and they will get deliveries. Deliveries are slightly slower than normal. We used to quote about 2 days. We're now quoting about a week for most deliveries, and we've suspended sales on some of our most popular items. 1 ounce gold Britannias, 1 ounce silver Britannias, because we're just not going to get enough to be able to give people a reliable delivery date. Where else do we go on gold demand? Yes, the other thing that's happened with gold, it's also started to hit the everyday national news. And I do a couple of quick checks on this occasionally. What I'll do, I'll go to Google, and with the All tab selected, I'll just type in gold and see what happens. Normally, you get website results for it, but when there's a busy news day or a busy news week, the first items you get are news items. Almost every day for the past couple of weeks, when we've done that, there's been news headlines up there reporting on gold up, gold demand, gold prices. That's significant in that when gold starts to hit and gold prices start to hit national and international media, that means that the general public become more aware and the general interest level goes up and the number of inquiries we get and the demand for gold goes up to the point where we can't handle the demand. Now, an interesting thing here is that we talked about silver backwardation and we knew that would make things go a little bit crazy. But what we've now found is that the forecasts that we've been giving the Royal Mint for our demand for gold we've been increasing them as the year has gone on. We've increased recently, but we're now only getting from the Royal Mint about 1/3 of what we requested. So every week that goes by now, there's going to be a bigger shortage in the amount of gold we've got. It's just as well that we've actually said, hey, we're not selling gold Britannias at the minute. We would do, but that's a longer story, perhaps one for another video. Perhaps at this stage, I should show you a chart that we saw recently. We'll put it on screen, and it's called Stages in a Gold Bubble. And the authors of it have put it into the public domain and said you can use it provided you quote the source, so we'll do that. With a bit more time, we would have produced our own custom version of this chart. But what we'll see, it starts from a low base and it's in 4 main sections. So the first section says what, Christian?
So the first section is the stealth phase, and that is titled Smart Money. And that is where the bubble starts and it starts to take off.
Now, I wouldn't call it a bubble at that stage because you don't know. It's just demand and prices. And actually what's interesting about the graph is you could interpret this as gold prices or commodity price or share market price or whatever it is, but you could also interpret it as being interest in that commodity, number of inquiries, number of people looking to buy it. And the two things correlate, but not always, and that's quite an important thing. So at that stage, prices tend to still be low. And the graph, I think, was based on a theoretical share price. So the next stage in the bubble is what?
The next stage is the awareness phase, and that's titled Institutional Investors.
Okay, so this would be big banks, pension funds, other people. Now, I would say gold is different from most other things that would appear on this chart about bubbles. Gold's been around for a lot longer than, say, shares in AI companies. So there's a huge difference there. AI shares and prices probably are a bubble. We won't talk about crypto because we won't, that's crazy. But gold's been around for ages. It tends to be more stable, but we still get price hikes. There still could be bubbles. So what's the third stage showing on the chart?
The third stage is the mania phase, and that is titled Public.
Okay, well, I'd say before that, as far as gold's concerned, there's the central banks stage. Now, okay, central banks could be institutions and vice versa. They probably are. But what seems to have been driving the gold market, gold demand and gold prices over the last year or a little bit longer is central bank demand. Central bank are putting some of their reserves in gold rather than in foreign currencies, American, US bonds, maybe government or treasury bonds. We've now got well into the point where the general public are aware, or a lot of them, and increasingly aware. And I would say in the last month, we've been approaching the mania stage of it, or perhaps I might say hysteria stage of it, because the interest has been growing, as I said before, exponentially. The price hasn't been increasing exponentially unless you take it over a longer period of time, and then it's gone up a lot. But it's that interest and demand factor that has been going crazy. And I actually think it's going to get crazier yet. We've not got to the point where the cashier at the supermarket is talking about it, or your taxi driver, or the people on the bus. When it gets to that stage, we really have reached the hysteria stage. And at that time, it might be too late to bother jumping into gold. I'm always being asked, where do you see gold prices going? Where do you see silver prices going? And my usual answer is, I don't know. Except, as I've said before, look at inflation. Inflation's built into currencies. Compared with the value of the pound or the dollar, gold's going to kind of retain its value, but the value of pounds and dollars, fiat currency, is going to go down. But when we look at a chart like this of a bubble, what we expect to see is when you get big increases, is you get price corrections. What we've just had over the last few days is quite a big price correction. I think one news item today in top stories, the top stories were JP Morgan reviews its gold forecasts up to $5,055 an ounce. And that's from about, currently what's gold in dollars at just over $4,000 an ounce. Only a month or so ago, we were seeing forecasts of $4,500 or $4,000. And at the time, I think a lot of people thought $4,000 was crazy. But on the same day, if we then do a Google search of news rather than all, the four top stories there, gold prices drop back again after biggest fall in 3 years. Google's frenzied rally ends with largest sell-off in over a decade. So one says 3 years, the other says 10 years. Who do we believe? Financial Times, gold tumbles 5% in biggest sell-off since 2020. Well, I think it's 6%, but who's going to argue? The Guardian, gold on track for biggest one-day fall since 2020. Bank of England government warned over something or other. And then the last one, Financial Times, gold as an equity hedge requires patience, which sounds like a very sensible article. So we've got two things there. Gold's just taken a hit by about 5 or 6%, and yet JP Morgan are forecasting higher target figures and presumably more all-time highs up to $5,000 plus. But that's gold in the news. The more people read about gold prices in the news and the fact it's gone up, the more people go, oh, I want to jump on board there because I'm missing the boat. The people jumping on now may be too late. They may not, because if JP Morgan arrived and gold's going to go up another 25% over this next year, then we're not yet in a bubble. Who knows? So I don't know. But because I'm an honest broker, I will tell you what my thoughts are and still admit that I don't know. You have to make your own mind up there. So what else? I mentioned mania, hysteria, lunatics. How does that affect us? And that rolls over into how does that affect our customers? I'll give you some quick stats here. In the year to 23 to 4, so that's 2 years ago, our sales were about £55 million for the year. In the year after that, so the last financial year, our sales were about £96 million. So that's a 75% increase year on year. And our forecasts for this year were between 150 million and 200 million. Now, that's quite a big range, and typically we forecast the top end range where there was well, let's be silly, and it could be 200 million pounds. We could do double. For most businesses, and certainly ones that have been around for 60 years, to double their sales in a year is just being crazy. But is it being crazy? If I tell you that our sales for October so far, and we're not at the end of it yet, are over £40 million. So that is pro rata to £500 million a year. So last year we did less than £100 million. We're now running at about £500 million a year plus, at about a five-fold increase. And we've got people out there saying, oh, why are you so busy? Why can't I get through to you? That's it. Until a month or so ago, we were just about coping with double the demand and double the inquiries and double the shipments. Now it's 5 times. Hey, we're just doing all we can. Pedaling really hard to try and keep up. Anything I missed out there, Christian?
Just the final phase of the bubble was the blow-off phase, which we didn't quite mention, and that is still included within the public section, where obviously you have the bull trap, then it returns to normal, in quotation marks, then it's fear, capitulation, despair, and then returning to the mean again.
That could be the bad news for people who invested, but actually I would say on that, what you should do is look at the longer term gold price chart, and we'll put one on screen. And I think I've got one here. I'll need me. I have to have a look at it. I think I did an all-time chart here. What I'd say there is that if people bought gold at the absolute top in the tops in 1974 and then in 1980, there was a very big drop from 1980 to 1999. And some people, journalists, were saying, oh, gold done nothing but go down. Well, of course, at about that time, Gordon Brown sold off half the Bank of England gold reserves at the absolute rock bottom price. And as soon as he'd stopped selling that, the price started going up. Clever timing. And we got another spike in 2008 for the banking and credit crisis. Again, people who bought at the top there saw, I think, about a 40% drop in gold prices and must have been going, oh, that was a bad investment. But if they've gone, they're still on very healthy profits from there. So what I would say is, look at gold as a long term, don't look at it as a short term. It's not really a good thing to go into as a short term investment. If you do that, it's short sighted. Certainly don't blame me if you buy gold at what perceives to be a top and then it drops. So what we're saying on that bubble chart is gold going to crash, I suppose? That's one thing that people want to know. And what can you do if gold crashes? I've got an answer here. It's a wardrobe department. Well, I'm prepared here. This got delivered to our house yesterday, I think. This is actually a wife's Christmas present, early Christmas present to me. And it's a ski safety helmet, and it's a top-rated snow sports safety helmet for, if you like, recreational skiers rather than full-time professional ski racers. And it's supposed to protect you from concussions and more injuries than anything else. It's got what looks like a silly woolly hat over the top, but actually that's part of the safety thing. And it comes in different colours. So we've got a nice blue, which goes with some of my ski outfits, and it's got a kind of charred, so it's not quite purple, that is it? It's kind of almost a charred purple. That goes on over the top, because it's part of the safety thing. I'm ready for a crash, but I don't think it will happen, and I won't be jumping off any cliffs to check the helmet, or jumping off any cliffs if or when gold crashes. Who knows if it will. We must have missed something out there. Am I going to keep talking with this, what looks like a silly helmet on? Is that somebody just looking at the statistics would go, well, 5 times is extreme. But what I also know is we're probably missing half the potential sales because people can't get through to us and can't talk to us on the phone Sure, you can order online, but a lot of people want to call in or phone us. So if we were getting all the sales and handling all that demand, that's potentially about 10 times the demand that we were seeing last year for gold. That's crazy. And now we have a knock at the door. That's somebody telling us we've got 4 minutes to exit the building, in which case I'd better hope that we've said just about everything we can. So that's all, folks. See you again soon. Oh, we forgot. If you like it, thumbs up. If you don't like it, and don't forget to subscribe, because you get more dribble like this if you subscribe. Might be important. Adios.